CNBC TV 18 and IndiaBonds presents Bond Street.
Welcome to Bond Street. Our guest for the day today is Aalok Patel. He's Joint Managing Director at Namra Finance. Aalok, hi, thank you so much for joining in. For the viewers who are meeting Namra Finance for the first time, what is it that the company does and who are the customers that you serve?
So Namra Finance actually is part of the Arman Group, which is about 33 years old. Namra Finance is a subsidiary of Arman that specifically deals with microfinancing. So we are at least trying to serve the bottom of the pyramid, underserved customers in the, the credit ecosystem. And essentially we provide loans mainly to women to help their enterprise or start something new to help the households generate more income. So Namra itself is about 15 to 16 years old now. And we are located in about 11 states, 6 lakh customers, about 400 branches. So, yeah, that's...
Aalok, when you underwrite a borrower, what are those top 3 things that you must be confident about before you're disbursing?
Yeah, so that's interesting. So we look at a lot of things, and we cannot treat these customers like a traditional bank would, right? So their paperwork is pretty light. If I was evaluating somebody else in urban areas, you would have salary slips and bank statements to make a decision. So the first thing that we typically look at is we try to get a good estimate around their cash flows and what occupation they have at a household level. So a lot of these households will have multiple sources of income. So we have on the street people that go and do that. So number one is that. The second thing we obviously look at is what is the household indebtedness, because there is a tendency for these customers to be over-levered, and you want to make sure that that doesn't happen. They can afford the EMIs along with all the other leverages that they have. And, the third part is, a lot of not just quantitative but qualitative factors. How are they placed in their communities? What is their lifestyle like? What are they going to use the money for? Obviously, credit bureaus is part of it. We don't just concentrate on credit bureau scores alone, but that is part of it. And we try to look at their track record and their history and form the best decision that we can. But it's not like traditional banking at all. You have to really go down on your hands and knees and kind of evaluate these customers.
I'm assuming the repayments are frequent, the capital size, or rather the ticket size is smaller here. But your capital adequacy with all of this is very, very strong. So what's driving that? What is the right comfort level for capital for your business?
Yeah, so, as much as people don't like to admit it, this is a cyclical business. The customers we deal with are highly sensitive to things which are beyond their control, like COVID, for example, or macroeconomic issues, or weather, or whatever you want to say. And so, in an unsecured retail lending, capital is your first line of defense if something goes wrong, right? So, we try to keep our capital well above what is regulatory required, because that is what is required in our business. We have a lot of capital right now, so we are probably going to leverage that and grow the book.
Okay.
Give or take 3.5x is where we try to keep it. Of course, there's no magic number which is right or wrong. It depends on a lot of circumstances. But we try to keep our capital higher than what most people would tend to see,
So what exactly is your current funding mix, and how is it evolving given the circumstances globally and in India?
Yeah, so, when we first started, we were largely reliant on banks, right? And then NBFCs came in, and then there was a lot of off-balance sheet debt that was started being done, like direct assignment, securitizations. We are doing a lot of retail lending at the moment, so NCDs, retail NCDs and things like that. And so I think it's important to have multiple sources of funds, multiple avenues for funding. Cash is our raw material. We always need it. And there's always some things going on, bank policies, regulatory changes, so it's important to make sure that you have multiple sources available at all time. So, banks remain a large portion of our book. now NCDs has become a big portion. I mean, probably will do about 500 crores of NCD raises this year. But it's evolving, so it's always keeps us on our toes.
Talk to us about your recent NCD bond issuance. How was the investor response? One, your core objective, and the key takeaway for bond investors.
It was beyond my expectations overall. We were oversubscribed, a very good mix of institutional and retail investors. The objective is obviously twofold. As I said, we have, cash is our raw material and we require a diverse source of funding. Sure. Getting it at a reasonable pricing remains an objective as well for any company. And for the bond investors, I think they like the fact that we have a good vintage, very conservative lending, good underwriting, zero defaults in the last 33 years. So all that adds up, adding some level of credibility to the company, and that's great.
CNBC TV 18 and IndiaBonds presents Bond Street.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.